Hi, Steve Sosnick here with today's Interactive Brokers Midday Market Update for Monday, November 2nd, 2020. It's a rally day. I guess, coming off the back of last week, which declined sharply, there's a certain amount to be said for a relief rally. We really actually saw it late in the day Friday as we bounced, and then we sort of meandered in the overnight session, and then someone somewhere decided in Europe that it's a day to rally, and up we went. I actually think the main reason for that is because it's the first of the month. You get new money in on the first of the month typically. There's the old phenomenon noted by the Traders Almanac and others that the best days of the month are often the first day or two, and especially after a decline like we had last week. So you add two factors. It's the first of the month, and if this is in fact a correction or bear market phase, bear market rallies are short, sharp, and furious. Remember that one always. But then, of course, there's the elephant in the room and the donkey in the room, if you want to talk U.S. elections, and that is the election tomorrow. Realistically, nobody really knows what's happening yet, or if they do, if they do, they're either lying or they have illegal insider information. So what that means is markets will remain skittish until there is some clarity. And the time for that clarity is not clear. Just saw a headline go by that Philadelphia doesn't really expect to have their votes counted for a couple of days. And part of the problem there is Pennsylvania is one of the swing states that could swing the election. Philadelphia tends to vote highly Democratic. You could get a situation where most of the rest of the state shows a result that's Republican-oriented until the Philadelphia votes are counted, and then that changes things, and that would be perhaps the worst scenario is some sort of contest over the election or people fighting about it. I don't know. I mean, these are all scenarios. I can throw out scenarios. Everybody can throw out scenarios. What it means is, from a practical point of view, is because no one knows really what's going on, markets get skittish. And I've alluded to this, and I'll try to find the link because I'm pretty sure I put something out in March or April when markets were really skittish about what happens. Market liquidity dries up. I mean, it's not like market makers have some secret amount of knowledge of how to price things. Really what happens is their few defenses include widening markets and shrinking sizes. Well, if you have wider markets and shrinking sizes, guess what that means? Volatility. It means markets hit air pockets, and I think you're going to be news-driven, hitting air pockets for a couple of days now until we have some clarity on the result. Whether that is late tomorrow night, whether that is sometime on Wednesday or sometime in the days thereafter, we don't really know. And one thing to keep in mind, and I really kind of forgotten the statistic, but there's all this talk of we have to know by midnight on election day, and it turns out pretty much no election is known by midnight on election day, except for true landslides. So don't expect to know anything tomorrow, certainly, because they're pretty good about keeping the exit polls quiet during the day. Don't expect much on Wednesday, and if you do, expect some back and forth potentially. What that means is expect air pockets. And also what that means is if you want to trade, there'll be plenty of opportunities to trade, I think. What it also means, though, is don't expect any sort of real informed trading or any knowledgeable trading. You can surf the back and forth moves. But what this means is it's an okay environment if you're a trader. It's a potentially crazy environment to do stuff in if you're an investor. Hopefully you've thought about the post-election scenarios by now. You do have a little time to implement them if not. And we can go through the wide range of them. I kind of have. And quite frankly, at this point, you know what? Go back and see what I've said. Go back and see what others have said. There's a million different explanations out there. I don't mean to sound exhausted, but that really is kind of the problem you have now. Is there's so much going on that it becomes almost impossible to reckon with, and you're going to know the facts at some point in the near future, and you can invest off of them. Remember, 4 years ago, the markets got it way wrong. The markets sold off into the election a bit. Well, actually, He sold off, for the evening as the election results came in, and then rallied sharply thereafter. Markets don't necessarily know much about anything, and markets are really not particularly good at political stuff because it's not their bailiwick. Their bailiwick is earnings, dividends, sales, things like that. And guess what? The markets haven't been doing all that well with that either, because a lot of companies have been coming out with better than expected earnings and getting whacked anyway, which we saw last week, which was the real explanation behind Friday's downward move. We're seeing a little improvement in that today. Markets kind of rewarding Kraft, Clorox. I don't know how much that is the broader market being higher or a change in sentiment. Those are certainly two stocks that would benefit from the COVID type of economy. But this is what it is. Right now, the one thing that I can tell you to do is do that gut check. I've talked about it before. I'm going to talk about it again. If the moves of last week got you feeling unsettled, nervous, couldn't deal with them, then you're carrying too much risk. If the moves of last week were something you could take in stride, then you're probably carrying an appropriate amount of risk and make your decisions from there. And we'll be talking about this stuff tomorrow, certainly without any knowledge, but we'll hopefully be talking about it later in the week with some knowledge. Have a good one, everybody. Bye-bye.